Hello, and welcome to today's Ag Smart Money Week webinar brought to you by the University of Nebraska-Lincoln's Center for Agricultural Profitability and Nebraska Extension. I'm Shannon Sand, Extension Educator and Agricultural Economist with the Center for Ag Profitability. Throughout Ag Smart Money Week, we've been focusing on building stronger financial foundations for Nebraska farm and ranch businesses through daily webinars. You can find recordings and more information at cap.unl.edu/smartmoney. Today, for the final webinar this week, we'll take a closer look at income statements, also known as profit and loss statements. These are essential tools for tracking income and expenses and understanding how profitable your operation truly is. This session will walk through how to build and interpret an income statement, evaluate business performance, and identify opportunities for improvement. Presenting today is Anastasia, an Extension agricultural economist with the Center for Agricultural Profitability based in Southeast Nebraska. Anastasia will share practical examples and insights you can apply directly to your own records. Please type your questions into the chat or the Q&A box at any time during the presentation. Anastasia, thank you so much for being here.
Thank you for having me. Thank you for that introduction. And then let's dive deep into the profit and loss statements, how to measure profitability and net worth growth. Sorry, there, had to find my mouse. Okay, so first off, what are we going to cover? We're going to go over the why we are going beyond those tax records. We're going to go how to build a profit and loss statement, and then cash basis versus accrual basis, and then how do we adjust your cash basis to an accrual adjusted. We're going to then talk about how to connect your profit and loss or income statement to your net worth change and how to link these to your long-term goals. At the end, I'll be available for any questions. In the meantime, if you do have some, feel free to drop them into the chat, or there should be a question and answer box that you guys could enter those in as well. So first off, why do we care about our true profitability? Why don't we just want to look at our tax records? Many firms simply rely on their tax returns or their Schedule F as a measure of how their business performed, but often that's just based on cash accounting. It's easier, it's practical, it's how most farms or ranches operate, but it also does not incorporate things like your inventory, unpaid receivables, actual depreciation. It only tells us about what they really need for taxes, right? So it's not a very clear picture. Once you know your true profitability, it drives the capacity to invest, reduce debt, build net worth. It really gives you the chance to look deeper into your operation to see what's working and what's not, and how to meet your goals. You also are more able to look at your insights, compare your yearly input use, whether it's your fertilizer, chemical, your feed rations, whatever the case, your marketing abilities. You're able to compare them from year to year to year to see how you are comparing, and maybe compare yourself to others by benchmarking to an operation of similar size to see how profitable you are, or where of improvements can be made. So, what is a profit and loss statement? You're going to hear this terminology intermixed with an income statement, an operating statement, or a profit and loss statement. They're all the same thing, but it simply shows the revenue minus the expenses over a period of time. So how this is typically going to look is you're going to have your revenue, your all your revenue, sales, government payments, insurance, custom works, and you're going to have all things related to your operation as your revenue, and then your operations operating expenses. So what are your inputs, labors, repairs, all that listed out. This is why we like to use the Schedule F, because most times it is broken out into those different segments. And then we're going to have that non-cash or adjustments. We're going to have that accrual adjustments. And what that shows your inventory changes, depreciation, all of that. We're going to show you how to build that, and then it's going to come out with your net farm income or potentially loss. It's going to be a lot more meaningful than what your Schedule F says, and it really will show a good idea of how your farm is operating or ranch is operating. So first off, let's go over what a cash basis is versus accrual basis. A cash basis is how most farms operate. It's practical, it's easy. It's you are recording when you put that check in the bank and you are recording when you wrote that check, right? Accrual basis is just when that revenue is earned. So if you custom farmed for somebody and you did that operation on October 15th, you are recording it on October 15th, regardless of when you get that check. Same for expenses. It's when revenue and expenses are incurred, not when you actually pay or receive that money. So, accrual adjusted is your cash records plus your inventory changes, right? It's that kind of that middle ground. We're also going to add in the account receivable and payable, and then we're going to have a true depreciation. We're not going to do the tax depreciation, but we are going to have that true depreciation of equipment. And why do we want to do this? We really want to have that accurate picture of your profit and loss statement. So, what are you going to need? First off, you're going to need your Schedule F. You're going to have that broken out into revenue and operating expenses already on your taxes. So I think this is a really good way to start. If you don't want to use your Schedule F and you want to use your own revenue operating expenses, that's great. But most people like the Schedule F because it is an easier way to do it. And then you're going to need your current beginning balance sheet and current end balance sheet. Again, profit and loss statements look at a period of time. So most commonly, they are looked at January 1 balance sheet versus your December 31st balance sheet. Those are typically the periods that most operations will look at and most banks when you go to try to renew loans or talk to your financials. Okay, so we're going to work through how to actually build this balance sheet. So let's say that we had a farm or ranch, and on our 1040F or our Schedule F, our profit is $6,500. That's what taxes say. But how profitable was that farm or ranch really? So again, we need some more information. So we went and we created some more information. The Schedule F said that the depreciation on there was $53,000, and then we had our prepaid supplies, crops, feed, livestock, breeding livestock, other assets, interest, all of that, and then we actually had our depreciation for our machinery, equipment, titled vehicles, and any buildings and improvement. You can see how they change from January 1 to December 31st. Now, I have on here large purchases like land or machinery. Those are going to be those things that are not happening every single year. So you're going to leave those large purchases or those large sales off of your profit and loss statement. Okay, so let's look how this is built. Okay, so here I created this spreadsheet. This is a very simple one. You can find a lot of different examples where you will go in and put every year's like your feed expenses was this many $1,000. This is what all of your expenses were off of your Schedule F. If you want to use one of those spreadsheets from a different university's extension system, that's great. This is an easier way to approach it. Okay, so how this works is we're going to put in our Schedule F profit or loss, and it's on line 34 of your Schedule F. And I said that was $6,500. And then we're going to add our back tax depreciation. And we said that was $53,000. Okay. I already entered all of this information here, your accrual adjustment inventory changes, so that you guys wouldn't have to sit there and watch me change each line item. Okay. But then we'll see how this changes. So simply, We're looking at the change from January 1 to December 31st. You'll see here, like, for example, it's important to notice that you are not having as much prepaid or supplies as you did on a typical year, right? You're spending $10,000 less than you did last year on prepaying supplies. Now maybe that's because if you go down here on your crops and feed, you're sitting with $25,000 maybe in a grain bin that you haven't sold yet, or it's in the elevator that you haven't sold. So it's important that we look at how our inventory changes, and that's why this accrual adjusted profit and loss statement is so important. So we have on this profit and loss statement, we have total inventory changes of $37,100. Okay. Great. So we have our net operating profit, everything with our inventory changes, our tax depreciation added, and then our true farm profit or loss added. So it's saying here that we actually made $96,600, but we have to take in some expenses as well. Let's look at our actual depreciation. So tax depreciation. Oh, I don't want to scroll that far down. Tax depreciation, right? You are allowed to depreciate items at different rates, right? Depending on your tax year, depending on a lot of different the age of the equipment, all of that. But so what the actual depreciation is like, let's say you're going to have this piece of equipment for 10 years. It's worth $20,000, and for salvage you can sell it for $10,000. So each year that depreciation would be $1,000 for each year, because you can sell it at $10,000. So you can do a real depreciation that way, or you can use a market value, right? If I had equipment that was worth $320,000. Now, maybe at the end of the year, I could only sell it for $292,000. That's another way to approach it. But you're going to want to do that for your machinery, your titled vehicles, and any buildings and improvements here. Land is not included in this calculation because land is not a depreciable asset, right? Land is usually just goes up in price. You don't depreciate out land. Yes, the land values might go down a little bit. And that will be reflected in your net worth statement. We do not look at it here in your profit and loss statement. So we add those all together. If if we were simply if everything was settled, nobody owed me money, I didn't owe anybody else money, my true net farm income would be $60,746. Okay. But let's say that we have an accounts payable. We need to pay a bill that was worth $5,000. And let's say that my neighbor owed me $1,200 for bailing over the summer that I still have yet to be paid. It's important to capture this in your profit and loss statement, because that is work that has been done within that period of time that needs to be reflected in your net farm income. Okay, I think one thing to point out here is you can see my formulas here, how I do everything. But this number, we are subtracting that out because we owe. That is an accounts payable. And so if you are creating this, make sure that your math is calculating correctly. Okay, I entered in $5,000 because that's the amount I owe, instead of putting the negative $5,000. So just make sure if you are creating this on your own, your accounts payable is being deducted off of your profit and loss net farm income. Okay. So we said that the taxes said that we made $6,500, but how profitable was it really? Well, according to our accrual adjusted net farm income, we made $56,946. That is your true profitability of that farm and ranch. So, one thing about this, if you are going to go into this work and you're going to dive deep into your numbers, right? You have a lot of different things that you're looking at. You're looking at profit and loss, you're looking at your balance sheet, you're looking at your net worth. What are each one of these things, okay? So your profit and loss period is over a period of time. Whenever you're looking at it, whether it's quarter one, whenever it's a year, whatever the case might be, it's the true profitability of that operation. A balance sheet is only a snapshot. So your profit and loss is more like a video. It shows what's happening over that time. A balance sheet is like your picture. It's a snapshot of what your net worth is at that time. So your net worth is again your assets minus your liabilities. And your change in your net worth is any retained earnings plus your asset value changes. Why do you want to go through and look at these and make sure that everything is reconciling together? Is you want to make sure that your profit on your farm is translating into your net worth. You're not just worried about your cash flow. We are concerned about cash flow, especially, in farm economies right now. If you are a row crop, you are concerned probably about cash flow. But we also want to make sure that you are advancing like you should in a business. And we want to make sure that it is contributing to your real growth for your financial position. So let's put this into practice as well. Let's say on our balance sheet, my January 1 net worth was $450,100. This is going to be where that land is factored in. Okay. We're going to say that we have an off farm job that we make $32,000. We're going to say our family living expenses is $46,000. And then we are going to also account in there your yearly income or self employment taxes. So, one thing about this when you're looking, make sure that you are not double accounting. So, if you are putting in how much money is actually in your paycheck on your off farm job, then you don't want to have that double accounted in your taxes. If you're saying that your salary is X amount, you want to make sure that taxes are being taken out. So however you are entering this data, just make sure that it makes sense for the rest of the formulas, and make sure that there's continuity with all of your different balance sheets and profit and loss net worth statements, that they all are coinciding with each other. Okay, let's say that there's been some personal changes as well. Let's say that I have $850 more on my credit card than I did last time. And let's say that maybe the housing market I have a little bit more equity in my house. So my market value of my house is a little bit higher now. Now, one thing about this, if you're looking at the market value of your capital assets to include like your personal items, make sure that that's not already on the balance sheet, right? We don't want to have those double entries. So how does that look like in this example that we just talked about? Okay, you guys can hopefully see my screen again. So here we said that our net worth was $450,100. Okay. This carried down from the cell up here. We just carried it down. I already went ahead and entered in this data. So it showed, oh, sorry. Technical difficulties. I thought I had it worked out. So what does it really show, right? It shows that our true net worth increased by $41,439. So our December 31 net worth increased that much from 450,000. We are advancing, and we just want to make sure that our net worth is growing in accordance. And this way we can make sure that our goals are actually matching what we're doing on the farm and ranch. Let me get to the right slide here since I went to the wrong one. So you want to, if you're doing this, you want to be able to use multi-years of data to protect to predict any future performances. We want to make sure that we're linking this profit and loss to operational changes, right? If we are bringing in somebody, if we're changing up our marketing strategies, we want to make sure that what we're doing is actually profitable or improving your farm or ranch. We also really want to make sure that we avoid that one-time distortion. So you bought ground, you sell ground, you bought some machinery, anything like that, or maybe you just brought somebody back into the farm. Whatever the case might be, those one-time distortions, you need to indicate somewhere that's, hey, something is typically not, this is not my typical year. So there's going to be some different changes. Once you have this, once you are looking at your raw numbers, you're able to make some better decisions for your operation. You want to make sure that whatever you're doing on that farm, it aligns with your financial objectives. Your, whether it's you want to grow to 1,000 acres or 1,000 head, whatever the case, you want to make sure that it's, you are growing your operation, or you can set some goals too. And we also, I really like doing this if you are thinking about succession planning, whether that includes you bringing somebody back to the farm. Is this operation worth coming back to? Can it succeed? This is those are some really hard decisions that every family operation needs to have. Can it succeed? Is there major changes? Are we not making the best business decisions, and we are slowly whittling down our net worth because we're taking on too much, we're not making enough money, and so we're slowly whittling that down. But whatever the case might be, we need to be doing this and have setting up some realistic goals for ourselves. It can be reviewed annually. A great time to go and review it is at that bank renewal time, and then adjust things and see if it's reaching those goals that you want it to. So, for example, if you're coming back to that operation and you want to own 20% in 5 years, how much money do you need to make each year to achieve that goal, right? How, if your net worth is improving on your operation, how much of money are you needing to have that and to be reinvested into it? Okay? And remember, ta your tax-based income figure is only a starting point. It's a good starting point, especially if you don't have any, but it's really not enough to get the true profitability to see really what's happening on your farm. That accrual adjustment, taking the time to go over your inventories, your account payables, receivables, really shows your true profitability. A lot of times, we see, especially younger generations, they're doing custom work to as a way to improve their chances of maybe building some income to buy into more ground of their or to buy into their family operation. That's a great way to start and make, especially if you aren't renting or enough. But we need to make sure that that's accounted. We need to make sure that everything is matching up, and that we are looking at your balance sheet, your net worth statement, your income statement together. Once you have those, you can look at your efficiency ratios, you look at your margins, and then you can really make some good operational improvement by doing so, and really set yourself up for your long-term strategic operational goals. So, with that being said, I always like to end with this ag profitability accountability regions. There's 4 of us in the state. If you have any questions, go through and make sure you give us a call. I am going to be working on making this spreadsheet that I referred to earlier today. I want to be able to share it with you guys, but I do want to lock down any formulas, all of that, in case they can easily be distorted otherwise. And
I
we
was
want
gonna
to,
say, if you're me and you just want to get in there and play with it and then you mess it up and you make
no,
mistakes.
no,
So,
I'm going to lock it down.
yeah.
And then also, here are some really good resources
Okay.
about your operation. We do have a course called Know Your Numbers that CAP offers that really walks you through each one of these and will count for some borrowing trainers for FSA. Um, so if you're in need of that, reach out. We can connect you with that information.
You do have a question. Do you want me to read it to you?
Oh, I did not see that.
Yeah, sorry.
Yep.
I didn't know if we were at a point where I could ask you questions. Yeah, okay. How do you find information on actual depreciation of equipment, vehicles, and improvements?
Yeah, so your actual depreciation is you're gonna have to sit down and do it. I like using the market value, right? That says, okay, so my tractor, maybe it was worth $30,000. I'm just going to make up some money's figures here. But yeah, let's say it was worth $30,000. It's got some wear and tear on it now. Maybe it's the same amount, but maybe it's not. Another way is I'm just going to use my spreadsheet over here. I'm going to drag it out. Okay, so
Great.
because I'm a visual person, let's say my tractor is worth, if I can type, guys, let's say my
It's all right. It's
tractor
Friday.
is worth $30,000. Okay.
Mm-hmm.
I'm going to use it for 10 years
Okay.
before I want to sell it and upgrade it. Okay.
Mm-hmm.
So actually, I'm going to put that here. If I sold it after the 10 years, so if I sell it in 10 years, it's going to be worth, let's say, $15,000, depending on how hard you are on equipment. A good way to do that is take your $30,000 minus your $15,000. Okay. And then you divide that by your years. And so that would be a good way. Oh, hey, I need to.
Yeah,
Yep,
you
there we
got
go.
it.
Yeah, so you could just take off $1,500 a year off of your tractor if you did
Yeah.
that real depreciation.
And a lot of people do this straight line depreciation. There's
Yep.
different options depending on who your accountant is, I would say, or your bookkeeper.
Yep.
Um,
Yep.
with regards to taxes, sorry. I might be getting confused
Yeah,
again.
yep, you're going into
Sorry.
taxes. Like
Sorry.
this is just the actual real
No,
depreciation.
I
So
know.
I like to
I'm
talk
I'm
about like the
mentally
market.
prepping for
Yep.
the new
That-
year.
That's why I like to talk about the market value depreciation, right? If I sold
Yeah,
it at January 1, what would be the price versus if I sold it
that's
at December 31st, I could take off $1,500 realistically. Maybe some are, substantially more if it's newer equipment, maybe some are less, whatever the case might be. Maybe it stays exactly the same.
it's happened.
Hmm.
So, yeah.
And I'll try to work out something too on the spreadsheet, on a different sheet that maybe you could do some more depreciation if you wanted to enter your numbers, and I could make that on the spreadsheet as well.
Awesome.
Any other questions?
I was just waiting to see if we had any others coming in real quick. I don't see any coming in. Do you have anything you have going on in the next few weeks you want to tell everybody about?
Oh boy. So I will fully admit, harvest is still going on. So I'm kind of going week by week, but I know we're going to be having some land meetings start up in December. We are
Mhm.
going to be having a Southeast Area Women in Ag series of meetings.
Oh,
Um,
fun.
yeah. So, and then we're going to be doing some estate planning meetings throughout the state as well. And then ag outlook, talk about, the state of the
December.
economy,
Mhm.
how to set yourself up for success for next year. And then we'll also probably be talking about some farm bill decisions because I feel like we're going to be making some decisions prior to March 15th, but I could be wrong there.
Yeah, we'll just have to wait and see kind of how that shakes out. So, all right. Well, with that, thank you, Anastasia, for joining us. And thank you, everybody else, for being here and for being part of Ag Smart Money Week. You can find recordings and additional resources at cap.unl.edu/smartmoney. Have a great weekend. Bye.
Bye.